All right, so the FOMC meeting began today. It will conclude tomorrow. And while most observers don't expect a change in rates, many think that this meeting will be live in a lot of different ways, right? For instance, potentially 2 dissenting votes. And of course, maybe the need now for Jay Powell to do more explaining why the Fed shifted from its data dependency to this sort of data assumption, which brings us to the standoff between Jay Powell and President Trump. I want to bring in now from the Bahnsen Group, the managing director, David Bahnsen. So, David, for the most part, I can hear. Can you hear the Sergio Leone music in the background? I can do. Yeah. I think I did it well, almost like a. So, right now, Powell 4.25 too high. President Trump 1.00 too low. How do we reconcile this?
Well, first of all, I don't think this is totally serious, right? The president speaks with hyperbole a lot. I'd be critical of that idea that just as low as you can go is always the best place. It creates tons of distortions. It can be inflationary, but it certainly is a bad idea for proper allocation of capital. The 4.25 is restrictive. And again, I don't happen to believe we need a central bank to tell us where borrowers and lenders should meet. But if we were looking for a sort of neutral rate, I think it would be at 2.5 to 3, right, incrementally getting down there. So, yes, they have ways to go, but these two numbers represent extremes.
So do you think the Fed would be okay cutting tomorrow if that were their decision?
Look, I think it's very clear that they're not going to cut tomorrow.
Right.
And I think that what they're going to do is make up for it by doing 50 bips in September. They're going to end the year getting 75 out of the curve. So I still think you're going to get 3 cuts before the end of the year, but nothing's getting cut tomorrow.
All right. So yesterday we had a lot of auctions, right? We had a couple of bills, we had bonds, we had notes. And for the most part, I think they went okay, right? But $300 billion, and I bring this up because we get the Treasury is going to tell us how they're going to raise cash. And there's some anxiety over the fact that it may rely heavily on T-bills. Your thoughts on that?
I don't understand why people get anxiety about it because it is so obvious that it's going to happen. They have been relying on T-bills. It's just like home borrowers that go take the 5-year interest rate instead of a longer term deal, that we have front loaded our portfolio, the Treasury portfolio. Secretary Mnuchin talked about trying to extend the duration when we were at the zero bound. They weren't able to do it. I'm convinced there was appetite, even at those low rates at the long end. They weren't able to do it then. They're certainly not going to be able to do it now with the 30-year around 5 and the 10-year around 4.5. But ultimately, they rely on bills because it saves them money, period. I think it's dangerous to what you want that bond portfolio, from their vantage point as the borrower, to look like.
Let's talk about the dollar for a moment. Had one of his best days in a long time. Yesterday, it's coming back a little bit. It was like this is like the sort of the last area you can point to and say, well, American exceptionalism is over. But there are a couple of things for me. First, I think Bahnsen and Trump wanted the dollar lower. You can argue about how it got there, but they wanted it lower. And now we see here in this month, July, this has been the best month this year for the dollar. So it feels like equilibrium is coming back there.
Yeah, I don't happen to believe the dollar was up yesterday as much as the euro was down. I mean, you just have to look at what the cause and effects are. All currencies are taken relative to one another. The euro, basically in response to some of the tariff settlement, had moved lower. That pushes the dollar up. You have to look at the period of time. In this 6-month window, it is what it is. Going back further, yes, the dollar had definitely dropped on the year, trade weighted against other currencies. Sure. But if you go back 2 and 3 years, it's a totally different picture.
It was lower under Biden.
But you said the key thing, Charles. I know for sure Secretary Bahnsen wanted some of the kind of air out of the dollar. The problem is never up or down. It's why. And you don't want the dollar going down because you have less capital appetite from other countries.
Let's talk about some dividend ideas here. You've got some pretty hefty ones. Lineage. What is line is a symbol for those listening on radio? LINE. 4.87 dividend yield. That's obviously sexy. What do they do?
It's a REIT that just went public a year ago, has had a lot of problems. There's overcapacity in that cold storage space, so we did not buy. It got to a point now, down 50% since IPO. We're convinced the bad news is priced in, and we like that yield, which is growing. You get REIT tax treatment, and we think it's a wonderful small cap play to come in on cold storage as a REIT. Blue Owl and Blackstone are both asset managers. Blackstone's been one of the most profitable things we've owned over the last 15 years. My sincere thoughts and prayers to the family of the woman who died yesterday. It's an absolutely unfathomable story. Blackstone is the success story. We started buying it, Charles, when they had $200 billion assets under management. Right. It's now $1.2 trillion. We see Blue Owl, which, by the way, is across the street from Blackstone down on Park Avenue. Private credit, private equity, real estate, again, fee-based asset managers.
These guys are relatively new, though, Blue Owl, right? I mean, this was a lot of fanfare for the last couple of years. It feels like I don't hear it as much anymore.
Yeah, well, we're up about 60% since we bought it, and now we're still getting this big double-digit growth of yield, right. But they're going to have to go prove they can execute. So you're right, it's sort of settled for a little bit. We think that they are very good operators, very good asset managers, and you're not paying up. With Blackstone, you're paying up a little bit because people know they're going to perform. Blue Owl has a little more juice on it. That's why the yield is higher.
Great stuff. Miss you, man. It's been too long.
All right, bud.
Good stuff. Appreciate it.